The altcoin market is currently experiencing an incredibly aggressive rebound, and the reason behind it is profoundly bullish. You see, what happened on Friday was not a random market fluctuation. It was a coordinated attack, and it was an attack directed not against Bitcoin, but against the altcoin market. Bitcoin fell by approximately 10%, but many altcoins plunged by as much as 85%. And this all happened for a very specific reason. At a time when many retail investors found themselves unable to log into their exchange accounts to buy the dip. Convenient, is it not? In this analysis, we are going to explore exactly what happened and what the market's rapid recovery now proves to us. We will demonstrate how this event is intrinsically linked to global macroeconomic conditions, and why we are now transitioning into a period where altcoins will significantly outperform Bitcoin. We will also identify which altcoins are likely to see some of the most substantial growth in the near term. Because as is now clear, the altcoin market is on the move, and that momentum is only going to accelerate as confidence rebuilds across the retail sector. As we look back at the crypto market's performance, you are likely feeling slightly better than you were just a couple of days ago. The market is, by all appearances, recovering aggressively. Now, I know that many altcoins have not yet fully recovered to their pre-Friday levels, but give it some time. There is a very good chance that that will happen, and that it will happen incredibly fast. Because what transpired on Friday was a completely coordinated attack. And it was an attack that was specifically targeting altcoins, rather than Bitcoin. During this event, Bitcoin fell by a significant, but not catastrophic, 16%. Many will tell you that this is because Bitcoin is incredibly strong, that it is the king. And you can believe that if you wish. But I believe it is for a different reason. You see, the next phase of this market cycle is one where altcoins will outperform Bitcoin. I will prove this to you in a moment. So knowing that, what would you do if you had the ability to manipulate the markets with a single social media post, or some other similar mechanism? You would want to target the assets that are poised to perform the best in the coming months, would you not? And so, they targeted the altcoins. The entire altcoin market was nuked, based on a news story about a tariff disagreement between the United States and China. And if you believe, by the way, that this was all because of a particular Trump tweet, then you clearly have not been paying attention to the constant market manipulation that occurs behind the scenes. Market makers move the price. And then, a public figure makes a statement that conveniently aligns with that move. We saw that move happen. We saw the market dump to the downside. And then, within the last 24 hours, we saw a conveniently timed tweet from Donald Trump telling us not to worry, that the markets are fine, and that everything is going to be okay. Don't worry about China, he said. We're fine. I still like President Xi. We're still buddies. We just had a bad moment. And just like that, everything is fine. This is a game. The market makers created a scenario of maximum pain, shaking out as many leveraged and fearful hands as possible. And now even I am amazed at just how quickly the market is recovering. And that has me incredibly positive about what we are about to see over the next few days, and possibly the next week or so. So why are we about to see a transition where Bitcoin does not perform, as well as the altcoins? Because of this. You see, Bitcoin has been in a bull market since back in 2022. The smart money was loading up down here, and they continued to load up on the way up. We have seen a series of manufactured dips, from the Japan carry trade to the first iteration of Trump's tariffs, to a brief war scare that was repaired by a single tweet. And now, we have had tariffs 2.0. The dip here was not particularly aggressive, and the buying pressure on Bitcoin was not that aggressive either, because a lot of that pressure went towards the altcoins. Bitcoin has been in a bull market since November of 2022, but the majority of altcoins, with the exception of a handful, have been in a period of chop, of accumulation.
What we have just witnessed was the end of that accumulation phase. Now we are going to start moving up. And that is because, in this period of time, Bitcoin has been behaving much less like a risk-on asset, which is what crypto is supposed to be, and more like a stable hedge against inflation, a safety asset. And what is the classic safety asset? Gold. As you can see, gold has been in a major bull market since the same time that Bitcoin entered its own bull market. Gold is currently making a chart that looks like some sort of a meme coin. That is absolutely bonkers. This now has a market cap of like $15 trillion. Bitcoin's market cap is around $2 trillion. Gold is 7.5 times bigger than Bitcoin right now. And the money from this will eventually flow from risk-off assets to risk-on assets. Because gold does not typically rally towards the end of a global macro bull market, it will start to slow down, and that money will go towards riskier assets. Like any good vertical chart, this has to come down eventually. And when that happens, you are going to see the altcoins go bananas. And how do I know this? Because the altcoins are setting up right now on the charts to go bananas. And the fact that we have just had that final crazy shakeout tells me that this is the end of the accumulation phase. And I know it is the final shakeout because anyone who would have wanted to sell in panic and fear would have sold on Friday. If they were leveraged at all, they would have been liquidated. All of the greed, all of the excitement has been flushed out of the market. Now we are at a time where we can build towards the next leg up. And this chart will prove it to you. And yes, I have shown it to you before. And yes, despite what happened on Friday, it is all still in play. This is the Ethereum chart. And this is a classic Wyckoff accumulation pattern. It is a pattern that is over 100 years old, created by Richard Wyckoff, who, in the 1920s, was working on Wall Street and identifying what the smart money was doing to manipulate the wider markets. We are seeing this happen time and time again. Right now, we are in the SOS phase, which stands for sign of strength. You can see that we had a dip down, but we are pretty much straight back to that previous range. In the SOS phase, we are preparing to move into phase E. Now, as you can see from this chart, there are no times. There are no dates. It is not necessarily clear exactly when that will happen. But the fact that we have had that crazy shakeout just a couple of days ago tells me that this will probably happen incredibly quickly. Because the most pain that can be created in the market right now is to move straight up. Why? Because everyone who got liquidated no longer has the money to get back into the market. And all of the people who panic sold down here are also still on the fence, not really sure what is going to happen next. And when suddenly the price is up here, they are going to be forced to FOMO back into the market, and they are going to be annoyed at themselves for having missed out. Phase E is the expansion phase, and historical precedent dictates that Ethereum will rally next. Now, why are we starting to see risk-on conditions re-enter the market? Well, interest rates have been coming down, and they will likely continue to come down. The media is telling us that the war in the Middle East is starting to ease off, and there is a very good chance that the tariff tussles between the US and China will also start to subside. We are likely moving towards a good couple of years in the global markets. And that is why altcoins, which typically perform well during risk-on conditions when the market is getting greedy, are poised to do well. Another important thing to understand is that when interest rates come down, all of the banks and other large financial institutions that have been buying bonds and treasuries and earning a simple 4 or 4.5% interest will be forced to move into riskier assets. They do this because they will effectively be losing money otherwise. If you are borrowing money to try and make money, and suddenly the money that you can make is reduced, what are you going to do? You have to go and find a way to make more money. And the only way to do that in these markets is to go into riskier and riskier assets. And that is what will eventually lead to a crazy, disgusting bear market after this bull market is finished. But we are not there yet. That is all still ahead of us. So where should we be looking in terms of altcoins right now? The assets to be watching are the ones that got absolutely smashed on Friday, particularly the larger cap altcoins. Most of the large cap altcoins got hit the hardest because they have active futures trading, which makes them far more volatile. And what happened was not just a simple market sell-off. This was a capitulation event. As market makers pushed the price down, they triggered a cascade of liquidations. Then the market makers themselves started to panic. When the exchanges, who were also likely over-leveraged, started to get nervous, they began to forcibly close all of the short positions. This meant that the market makers, who were using those short positions to hedge their holdings, were suddenly completely exposed, and they were forced to sell all of their tokens onto the market at once. That is why, all of a sudden, in a very short space of time, you saw mass panic. A lot of that panic wasn't from retail investors. It was institutional level, market maker level panic. And now we are starting to see coins like SUI, a blue chip project, rebound by 400% from their lows. The coins that are seeing this kind of aggressive buy-up are likely going to do very well. These are incredibly well-funded projects, with huge amounts of money in their treasuries, and they have the ability to push the price back up very, very fast. And it is very easy to push the price back up when there are no sellers left, because all of the sellers have already been taken out. So what they did is they pushed the price back up. And now you are going to see the price continue to climb, because there are simply no sellers left in this market right now. Every time we have seen bullish markets over the last few years, SUI has been one of the fastest to react, and this time, in my opinion, will be absolutely no different. Hyperliquid is another classic example. Huge adoption, huge amounts of money flowing into and around this particular coin, and it is already back up significantly from its lows. World Liberty Finance, a fund that was founded by two of Donald Trump's sons, is likely going to see a pretty strong bull market, because it serves as an entry point for Wall Street into the world of blockchain and crypto. Beam, a coin with $180 million in its treasury. I have talked before about how successful and wealthy these projects can be when the market gives them a chance. When we start to return to a state of confidence and greed again, which will not take very long if the market continues to rally like this, you are going to see a lot of these coins move very strongly. Now, what about the smaller cap coins? Many of these did not see such brutal ups and downs, and that is because they do not have perpetual futures trading available on them. So do not worry too much in the short term if your smaller cap coins are not doing as much. The market makers are about to push up the likes of Aptos, SUI, and WorldCoin. The large cap coins will start to perform strongly first, and then what will happen is this. As we all make money on those large cap coins, we will get greedier and greedier. Suddenly 10 or 20% gains in a day will not be enough, because we will start to see these odd, small cap coins pumping by 50, 100, or even 300% in a single day. And we will go looking for those small caps. The larger cap coins are pumping first. They have already started to show you that. They got shaken out down here for a reason. This happened purely so that the smart money, whoever knew what was really happening behind the scenes, could get into the key projects out there at a discount. And many of these larger cap coins will see significant moves from here, even though they have already seen some very strong rebounds. Do not get drawn into the ones that are already at all-time highs. Go and look for the ones that are still down in their recovery zones. These are likely going to give you much better returns. So what is the takeaway from all of this? Start to take notes of what has happened over the past 48 to 72 hours. Yes, it was a big one. It was a particularly bad one. But over the last few years, these things have continued to happen every single time. If you ended up panic selling your altcoins on Friday night, and then you woke up on Saturday morning to find that they were back up by several multiples from the point at which you sold, just take note of what happened. Take note of this manipulation. It happens time and time again when we are in a bull market phase. Any bad news that you hear across the media should really be taken as an advantage, as an opportunity. Be scared when the news is positive. Be greedy when the news is scary. Let me know your thoughts on this market rebound down in the comments below. Do you believe this was the final shakeout before the next major leg up? If you found this analysis valuable, be sure to hit that like button. Subscribe to the channel for more insights into the behind-the-scenes machinations of the crypto market. And share this with anyone who is trying to navigate these volatile times. Thank you for watching. And until next time, stay vigilant.